Good morning, this is Steve O'Hare from Signal Centre. Today is Wednesday, the 25th of August, and we're taking a look at the commodity sector, in particular the energy sector. We're taking a look at crude oil, WTI, Brent, and we're also going to take a look at natural gas. So we're going to start off picking up a few headlines. Crude oil continued to regain ground on Tuesday with support from a weaker US dollar and a rebound in risk conditions. The full approval of the Pfizer vaccine also boosted confidence with a Delta variant could be brought under control globally. Oil also gained a limited boost from outages at some Mexican rigs, and WTI posted net gains to just above 67.70. We're going to take a look at that at the charts in a second. API data recorded an inventory draw of 1.6 million barrels, slightly below market expectations. WTI traded around 67.40 and Brent traded around 70.25 towards the close yesterday. Now we've got oil inventories out later. Look out for that. Last week we had a 3.2 million barrels fall in stockpiles, so could be an interesting number this afternoon. That comes out at 3:30 UK time. So let's take a look at the charts. I'll start with my long-term chart, the weekly chart. I turn into a monthly chart and we get a very ominous looking negative formation. However, we have seen prices move down towards this supportive trend line. It was a downward trending resistance line. It's now turned into a supportive line. That's the way technicals work. That was just above $61. Prices stalled in front of that and have rebounded quite aggressively, and we can see that on the daily chart. And this is a pretty decent recovery from the lows. We've recovered almost 10%. Now that's not a bad move considering that's happened over a 2-day period. So looking pretty positive now on crude oil. Maybe that's an indication that the inventory draw or the inventories this afternoon could provide a much needed boost for the oil nations and producers. Trend around 67.40, daily chart looking pretty positive. We've got resistance, which was previous support, will turn into resistance now. That comes in at $69. Above that, we've got $71 as the downward trending resistance line. Also horizontal, we've got 69.39. So levels to watch there. This is the shorter term chart, which we'll pick up on those levels again. We've had a little bit of a stall here. This is a evening doji star formation. However, the price action has stalled on the sell-off. It was confirmed by this candle here. This candle represents a doji, which is indecision on this corrective move, and potentially we're looking to push back above the 67.70 level, which will open up the upside again today. Brent crude, similar type of price action over the longer term, medium term charts, and the levels to watch on this daily chart. We can see what a great reaction we've had from this 64.40, again measured move, or the measured target. That correction is very similar to the WTI, just under 10%, and that's not bad considering it's over a 2-day period. So again, we've stalled at this level. Let's get it up in the chart. 70.61 in Brent, trading around 70.35. We retraced from the 70.61 down to 69.77, and it's bounced from there. So if we look at price action on the hourly chart in Brent, we can see volumes have declined and the price has moved higher. So that does indicate a little bit of bearish divergence, but supportive prices should come in, or support should come in around about 68.38, and looking really around about 71.87 as maybe an area to sort of take profits for any short-term longs that have been built. So that's looking again positive on Brent crude. Let's take a little look at natural gas. We'll look at the longer term chart here. We've got a potential for a double bottom formation. Well, we could even say it's a bit of a channel formation, but it looks we've got lower lows, which isn't a great indication. But we've got a trend line coming in, which we're testing now. So this is potentially a double bottom formation here, which would require a break of this resistance coming in at 495. We're trading at 391, still a way to go for that. This is obviously on the longer term chart. Let's take a look at the daily chart. And we can see a nice bullish hammer posted on the 19th, and price action has been positive since then. Yesterday we saw a pullback in prices from the psychological $4 level, stalled around 388, still under a little bit of pressure on the natural gas side of things. If we're looking at chart formations, this does look a little bit toppy. So we have to take out these highs around about the 420 level. We have to regain ground above there if we're going to shake off this bearish formation that is forming. Potential for, it's a bit early to say it yet, but for a head and shoulders formation. I hope this has been informative for you on the technical side of things, and look forward to catching up again next week.